Hello, hope you're having a great day. I wanted to take a moment to talk about what higher interest rates mean for home buyers today as compared to last year. All of us mortgage people and realtors love to tell you about when rates fall, how much more house you can buy. So I thought it was the fair thing to do to the rate gods and the real estate gods to show you what it means when rates are higher. Kind of a sad face, but still something we need to know. Let's look here. Can you see that? Okay, good. So here's a comparison. On the left is 2021, on the right is 2022, sorry. We're comparing a couple different things. Let's start out with a 500 sales price with, let's go to 10% down. So what does a $500,000 payment look like, payment on a $500,000 house look like last year versus this year? So let's put in last year's rate. Let's just say 3.25 was around for a long time last year. And today we're going to say 5.75. So give or take a little bit. Using some rules of thumb for insurance and tax numbers, this gets to be a higher payment by $660 on a $500,000 purchase price, which is roughly 20% higher in payment. Now, that doesn't really factor into maybe the difference in homes. A $500,000 house buys you more home this year because it's a little bit more competitive, more of a buyer's market than it was last year. Last year, a $500,000 house listed would probably have gone for 550 or 600, who knows. Anyway, but this is just comparing same sales price house year over year. Okay, let's go to $1 million. Let's say 20% down. We'll keep the rates the same. And there you are, 21% higher in payment. So that is a nice rule of thumb. Let's go higher. And let's do a little higher on the interest rate last year because it was a jumbo. There you're at 18% higher. So roughly year over year, same sales price house, you're going to be saying, I'm paying 20% more a month for this house. Let's look at it the other way. What about the same payment? Let's keep the payments the same. So in this example, the formulas are a little wonky, so we have to base the tax numbers on and insurance on something. So we're going to base them on 650. Let's say last year a 650 house listed would probably go for 700. Okay, and let's see what goes on with the payments. We'll go to that 3.25, and we'll go to 5.75. So that $700,000 house last year, that same person, if they want the monthly payment here at $3,800, they want the same payment. How much less of a house are they going to buy? $522,000. That's 25% less of a house sales price wise than they would have received, than they would have been able to purchase a year ago. So that's it, kind of numbers to numbers. What's not factored in here is the fact that there's less competition for homes this year. Sales prices are falling. So that's not factored into here, but that's a big factor when considering to buy a home. So in this case, the person that last year would have bought a $650,000 home for $700,000, what if, let's go to the other chart actually. So let's say $700,000 last year. This year it's going to be $650,000. Then you're only 10% higher. So that's a factor that weighs in this analysis that I don't have programmed in here, because house listed today might go for over market, might go for under market. Anyway, it's kind of hard to peg. Houses across the board are less or more in value for how they're selling. We probably have to wait a few more months before we get any reasonable realtor data on that kind of stuff. Okay, there you go. If I can run some numbers for you, let me know. If could you subscribe somewhere down there? Subscribe to this YouTube channel if you haven't already. And I hope you have a great day. Thanks.